Hey guys, I just want to bring up an opportunity for resource investors. If you want to rub elbows with the big wigs and talk to companies directly that are handpicked by Rick Rule, well, you got to be in Boca Raton from July 7th to 11th for the Rick Rule Symposium. The event has become a premier event in the mining space, and they're going to have some pretty big speakers like Robert Friedland, Sean Rusin, and the great Rick Rule. And also, we're going to be there. You can meet the Deep Dive team in person. So if you're interested in rubbing elbow with some of the biggest heavy hitters in junior mining, check out the link below. Good afternoon, everyone. Today I'm chatting with Buster Hunsaker from Giant Mining. In this interview, we discuss the Majuba project, which Buster has been working on for over a decade. The project has a historic copper and tin mine, and the economics weren't really that exciting at $2 copper, but now that we're sitting north of $4, the economics are tremendously exciting. So in this interview, we discuss the copper market, we get into the economics of the Majuba project, and we talk about what shareholders or potential shareholders can expect from the company over the remainder of 2024. All right, everybody, enjoy the interview. Buster, thanks so much for joining us today.
It's my pleasure. Love to talk about it.
So I'd like to start off just talking about copper for a minute. Copper has had a pretty good year at one point, flirting with the $5 level. It's fallen back a bit and then come back a little bit over the last week. In your opinion, what's driving the price appreciation here? I know that we often hear the quotes from Robert Friedland talking about how we're going to need more copper in the next 25 years than we had in the last 5,000. And we have these big deficits in front of us, but at least in some level, you'd imagine that that's priced in. What's your take on the copper market right now?
Well, first of all, I completely agree with what Friedland's saying, and I think it's interesting that he's one of the few that has really been really public about it, because I think the demand coming, but what we're seeing as much as anything is a supply deficit, what's behind us, what we've mined and have not found to replace what's out there. So even the upward curve has stayed steady on how much we're using, but the supply just isn't there. And that curve will get steeper and steeper as these giant mines begin to get old and shut down. And so the deficit just gets larger and larger unless we find more copper. The price reflects what we need, in my thinking.
So we've seen some issues with mining permits. I mean, we could talk about what's happened with Cobre Panama in First Quantum in Panama, which would have made up 10% of Panama's GDP, and they still didn't move forward with it. And then we've got some pretty big projects in places like Alaska that have never been able to see the light of day due to regulatory issues. At what point do you think the government's going to get serious about moving projects forward? Do you think that the examples we've seen are just sort of fair examples, or do you think that we just need higher prices to pay for all of those regulatory issues and environmental issues that come up with mining?
I'm a little bit, I kind of work both sides of the fence a little bit. I think about permitting, and I thought about permitting all my career. All the time I've done exploration, working around the world, but it's one of the reasons I have stayed focused in Nevada, because we are a state that, we lead the world in the safe jurisdictions, places where you can get mines permitted, and we're a proven setting. So when I think philosophically, things like Alaska, sooner or later, copper is such a strategic societal metal, even if the U.S. doesn't recognize it wholly as a strategic metal, you've got to have it. So the government will step in. Price always, if you get the price high enough, you could mine anywhere. But realistically and practically speaking, it's where Majuba comes into play, because we're in Nevada and because our permitting scenario is so stellar compared to the world. Places like Panama, I spent years in Mongolia in the early 2000s when, before Oyu Tolgoi, when the Erdnet deposit was about 30% of their GDP. And you knew that Oyu Tolgoi would get mined, you knew it would get in production, and you knew there would be a resolution as to how to go about it dollar wise. So I think that part settles itself with price. But I think if you're really going to look for copper and if you're going to look for metals, being in a safe jurisdiction, if you can find deposits in a safe jurisdiction, is a great place to be. And that's my primary focus.
So you mentioned Majuba, which is your baby, which is part of Giant Mining, which is recently created publicly traded company in Canada. What's the high level overview of the company?
Well, so Giant Mining really is it's built around Majuba. There are a couple of other smaller prospects in there, but our sole focus and our sole dollar right now is going into advancing Majuba. Giant's been working on it in some form or fashion for the last 5 years. Majuba's been around 15 as a project. Giant picked it up as the fourth, which is a good place to be if you're a junior miner. If you're a prospector at all, as you come on to deposits, historically, they usually go to between 3 and 5, go from 3 to 5 hands to get the exploration done. So Giant is focused on getting Majuba into an indicated and inferred category. The company's an explorer. They're not set up to be miners. They're really set up to be sound junior explorers. We know how to lever historic data. We know how to lever people. We know how to lever relationships in the districts we're in so that we can get all the work done necessary.
So Majuba has actually has historic production in with underground mining. Is this still accessible? Or I assume you guys are able to use that to your advantage to finding data points as part of your exploration? Can you maybe give us some color on that?
Yeah, if you kind of back up, Majuba was actually discovered in 1910 when the 49ers came across, and the 49ers came across in the 1850s, and one of the major access routes going through western Nevada, it's located in northwest Nevada, and one of the major access routes going across there went within several miles of Majuba. So in the early 1900s, they actually discovered tin at Majuba and staked the claims, but soon it became apparent that there was copper because it was on the surface. And so the underground mining that was done, they mined about 3 million pounds of copper, 20,000 pounds of tin in the early days, a couple 100,000 pounds of lead over the years, and a few 100,000 pounds of silver. Ounces of silver, pardon me. But the beauty of all of that is that the Nevada Bureau of Mines and Geology retains archival records. And so a lot of the data ended up in the records. The underground mines were driven in 1910. It was really mined from one middle, we call it the middle adit. It's in about the middle of Majuba, but there was a lower tunnel driven as well underneath, that was more of an exploration tunnel that got in underneath. And so we have data from that. We have drilling that came out of all of that information. Of course, we have all the production records, all the geologic mapping that occurred. And then over the years, starting in World War II, there were a number of companies that went in and drilled and explored at Majuba. And we've been able to build off of that data because we have about, I would say, 90% of all of the assays and geologic information that was generated, we've been able to gather both through the state archives and then through some personal acquisition of information. So we can build on that data. Access is still good for the underground. We can look at the geology. It also provides kind of an interesting snapshot into the progression of copper, because in those days they were mining, the initial mining was done on 10% copper, very high grade values. Overall, the average was about 4% for the 3 million pounds that they mined. So it was really pretty high grade mining at the time. And of course, they were mining underground. When we started, as the exploration started looking adjacent and around Majuba, it became apparent that Majuba was really kind of a mountain of copper. If you looked at Majuba from 20 miles away, it's prominent. It's a prominent peak, a prominent edifice that sticks up above the surrounding hills that it's located in. So as we started pushing out around that, we recognized that this thing was a porphyry copper, that there was a porphyry copper in the area. And as we drilled, we just stayed in copper. And it's allowed us to expand, understand copper through the 1990s, late 80s and 90s, now into the 2000s. The understanding of porphyries and buried porphyries, hidden porphyries has increased dramatically. We're able to apply the science. So as a junior that levers information, we can pick and choose the things that we think are most critical to allow us to get the best holes into the right area and end up with a deposit and now expand that deposit.
You guys do have some sort of sense of how much historic drilling's been done on the property over the years, including what you guys have done. Can you give us sort of some color on that historic level of drilling?
Yeah, in total, there's been about 25,000 meters of drilling done. Giant Mining has done 10,000 of those meters. And so historically, it really started in the 1940s with Freeport, of all companies, Freeport Sulfur at the time, pre-Grausberg, the time Freeport really became a monster copper company. But Freeport did some really key holes in the 1940s, underground core. We were able to gather that information. The geologist that did the work for them stayed involved with Majuba over the next 30 years. So that the understanding of those holes, even though we don't retain that core, we still retain the data that goes with it. And so if you take out of the 25,000 meters that was done, we've still got probably 18,000 meters of that data, of that core, that we've been able to go back through and gather additional information from.
So let's talk about the plans for 2024. If I'm an investor watching, what does the exploration look like in 2024?
2024 is a real pivotal year for us. We've got lots of, we hit lots of milestones in the last 3 years. And so now we're aiming for these future milestones. They become more apparent. Part of the trick on any sort of exploration is you've got to consolidate your work. The goal is to find a mine. The goal is to make money for the investors. And so the work that's been done, we focused in and around the historic mining for the most part. We gathered broad data across the property. It's a large property, covers 15 square miles. Sorry, that doesn't translate to hectares immediately from it, but 15 square miles. We have a very large land position. So we did all of the geology, geochemistry, geophysics, project-wise. The historic drilling had focused around the mining, and then we continued to focus in on that. And we reached a point last year where we did a 43-101, where we could see that the drill spacing wasn't tight enough to put us into an indicated and inferred category. But what we did identify was the potential for within our drill footprint around the mine of 50 to 100 million tons at 0.15 to 0.3% copper in an open pit scenario, which meant that if we can, this year's program then is coming back in where the drill density was the least. We're filling in the areas to take that 50 to 100 million tons and put it into an indicated and inferred. That's our primary focus, is to move it to the indicated and inferred. It's an infill and slight step out program to make the larger pits economic, to get them into that economic category. And then we're also starting a fairly early stage but involved metallurgical program that's very typical in a porphyry copper at this stage, where we go through and see how well this stuff actually will leach, which then will add to our economics. We know it leaches. We know we can put it on a heap leach. Doesn't require a mill. We're not shipping the material. But the question is how much and where, which then just adds to our understanding of the prices. Obviously, at these prices, we're thrilled. At when we first started Majuba at $2 copper, you could not look at the lower grades that we can look at now. Now at $4 copper, Majuba is enormous. If you saw $8 copper, you can think about it getting bigger. But as a geologist, when I translate that backwards, what it tells me is that a lot of places we've got low grades, we have high grade that hasn't been drilled yet around it. And so you fill that in. So our goal really this year is to infill, to make these pits economic, and then to do the metallurgy with it.
So for our audience, they hear 0.15%, 0.3% copper, open pit, heap leachable. Um, are there copper projects in the world that are being mined with those types of grades? And sort of what's kind of that break even point where the economics become really sort of interesting, and we can comfortably say that this would make sense to put into production?
Yeah, that's really a good question. I'm really glad you asked that question because it's one that I think it translates to the jurisdiction that we're in, and it translates to porphyry coppers in general. The overall average around the world right now is about 0.5 on copper. So with on big copper deposits, which when you think of it as an average, means you've still got a lot of mines out there that are mining at 1%, and then you've got mines that are mining, operating economically, profitably on the other end. And when you start looking at that distribution, you have to, first of all, have a couple of touch points. And the milestone for us, the big one is open pit, and then the material leaches, and then jurisdiction. And we're really fortunate because not only are we in Nevada, but about 70 miles to the south of us, really in the same Jurassic porphyry belt, if you will. There's an emerging porphyry belt coming along the western side of Nevada. The Yarrington mine is to the south of it, was a mine that operated in the 50s, was run by Anaconda, and then is currently back, has been in place for about the last 15 or 20 years. But right now it's under a joint venture with where Rio Tinto is putting money into it. They're looking at the Newton technology. They have an oxide copper similar to Majuba on the surface, and they're mining that. Their latest work, their latest PEA was at using a 0.18 average grade, and they're actually mining down to outrate for traditional copper people. Their lower cutoffs are very low, 0.02%, very low, but they're different from us in that they've got about 800 holes in their resource. So they're further along in the actual making it a resource. But what we know is that you can mine those grades in this jurisdiction and you can process them at these prices. And so that's the takeaway on Majuba. I think we've got demonstrated economics within 50 miles of us.
So is it fair to say that if we're looking at this and you're a retail investor and you're going, okay, well, I'm trying to think about the risks of this. We certainly need copper to maintain its price for a project like this, but this becomes a very interesting proposition as the price of copper goes up. We've got a historic mine that was historically able to pull out copper. It sounds like you have scale. From what I'm hearing, it's just a question now of you being able to prove that out. I assume at some point you'll have to find bigger partners to work with because you guys are just a little guy. So when I'm thinking about that from a risk perspective, it sounds like the big risk that I'm kind of worried about, share structure and all the common risks that exist with junior mining aside. What I'm really kind of focused on here is the price of copper. If the price of copper, if I believe, and I'm really bullish on copper, that copper is going to go to $7-8 a pound, I've got tremendous leverage here. But if it goes lower, or the company's not able to actually go and build out on this project based on the capital that you've raised, then I'm obviously facing that dilution risk that exists within junior mining. How do you think about what you need to do to move this project far along enough to have a major look at you guys and say, okay, we're interested in getting involved?
Well, so we'll preface my response with I'm the geologist, right? I'm not a junior mining guy.
Yeah.
In the consulting business, in our business that we do, we've been working with juniors for 30 years. So we have a fair understanding of what the technical requirements would be to make a junior prosper. So for Majuba, the way I look at it is with this 50 to 100 million tons that we're looking at, that's kind of your backstop. That's your no risk. You know, if we already see those numbers in the NI 43-101 in the exploration target category, and we look at the geology. That's why it's a range of 50 to 100 million. We actually there's a 20 million ton high grade nut kind of right in the middle of that. So you take the value of that backstop. Say you take the 50 million tons at a 0.3 grade. The value of that is like the pounds of copper that come out of that are 10 times at 100 million tons. The value of the copper that comes out of that if you worked it backwards into the value of the company, you're at a 10x current market price. Okay. And so I look at it from that perspective. It makes me comfortable as a geologist to the exploration. Where I really get intrigued about it is the 100 million tons of an economic at the 0.3 grade, given our infrastructure, given our jurisdiction, somebody will mine that even at $3 copper. Even at where we're going, even at $3 copper, there's a portion of that would be mined. It's permittable. The capex can be carried. But where I look at the major side of it, what we were seeing here in the last 18 months with the work we've done, we've drilled deep holes. We've drilled 2 holes in excess of 1,000 meters, and we're seeing the hypogene, the primary porphyry mineralization indicators that are underneath that. We've actually been through a series of intense and in-depth technical reviews from world-class technical people, as well as reviews from world-class corporate guys that are also seeing that scale. So what we see on the top with this 100 million tons, that what looks like is underneath, and what we've indicated in these deep holes is the blue sky potential. And I think that for the retail investor is where Majuba is attractive. You're backstopped on the price. This thing, as best we can tell, looking at things like what's in Yerington, it ends up being mined, and the market we're in says the price is probably about as low as it's going to be given the pounds in the ground. And as we had pounds in the ground, you're really getting a call on copper itself, because if with the deeper holes, with stepping out later in the year, we've got 2 to 4 deep holes that we're looking at. If we're correct, and when we get into that porphyry itself, that's when the majors then step in. And so there are plenty of examples out there within the Jurassic, in and around us, where you get into that deep porphyry. That's when the majors either come in and say, listen, we would like to make you a subsidiary of us. They put money into us because we have the technology going, or they say, we think it's best now that we take this and move forward. Either one of those are fine scenarios for giant mining. But most of all, I think from the investor perspective and the dilution perspective, we're talking a budget this year of maybe $4 million. We don't have a huge dilution to get to those points. And so I think it's a real sweet spot to be with a junior in a project like this.
Just running some high level numbers. Let's say that you got 100 million tons. And again, this is forward looking statements. This is just careful if you are taking this the wrong way. Back of the napkin, we're just saying things work out. You're able to prove this out. You find 100 million tons at let's take the lower end of that. Let's take 0.02 0.2% copper, which works out to around 400 million pounds of copper at $5. That's about $2 billion of copper in the ground.
Yep.
Now we're talking about 100 million tons. That's not going to be cheap to mine out. How much capex would, like, I know that like you guys haven't done a study or anything like that. Just trying to just sort of get a sense of a project like this. Like what, like, are there any comparables that have done anything like this in Nevada that you can think of?
when we first started doing these numbers at $1 copper, when we were looking at the very small resource, we were using numbers at with like 20 million pounds of 25 million to 50 million capex. It's a heap leach operation. I mean, we are the king. We are the king of the world when it comes to heap leach operations with gold deposits. So my guess, and it's purely a guess because really I'm an exploration guy, but I would say you're probably maybe between one and boy, this is as a QP, this is purely speculative on my part. All the
Yeah,
caveats.
and I don't want to put you in a position where you're not going to be able to sleep
No,
at night over things that you say. But this is just back of the napkin, trying to have a sense of the economics.
maybe on the upside you would be talking 200 million capex, and that would probably not include all of the exploration drilling, but really you would be looking at that kind of number. So when you start talking $2 billion worth of copper, and I mean, and obviously because our mining costs are so low, we're using about a $5 actually it's like 489 mining cost right now in our early stage estimates. So you're still at about uh you're all total, you're ending up at about maybe 750 million capex mining all in, which still leaves you a tremendous profit potential there. Usually the back of the envelope number that you would use as an exploration guy way early on is you've got to have 100%. Okay, you've got to see 100% more than what you think it's going to cost to mine it. And Majuba easily meets that category using 200 million capex and the cost of mining and all of the infrastructure. And so with those two things involved, we're still looking at 100% of the cost left over.
Yeah, but to be clear, just for anybody watching this, we're not saying that Giant Mining's looking to do any of these things. It's just, do the economics make sense for a major to get involved? And based on these numbers, we're talking about potentially over $1 billion of profit after capex. Should you be able to actually hit those numbers, and should the price of copper maintain where it currently sits at, which is again just back of the napkin, trying to give shareholders or potential investors that are sort of trying to wrap their head around it based on these assumptions, a sense of, okay, what's my upside here? If everything works out, and nobody's claiming that you guys have this yet, and none of these numbers are like signed off by a QP or anything.
As an exploration guy, you've got to look at the potential. I don't, I'm an old man. I've been in this business for 45 years, and I have no interest in spending the last 4 or 5 years of my career working on smoke. It's not in my interest. I got grandkids. I love my grandkids. I've got all these things I like to do, but there is nothing in the world for an exploration geologist like working on a discovery. And I mean, as you probably can imagine, Majuba is definitely in the spotlight because we think we've discovered not just a new deposit, but we think we've filled in a gap in this porphyry belt coming up across the western US. So we get lots of attention and have had lots of technical attention. So in order to work on something like that, it takes money. And in order to get the money in, you've got to be able to demonstrate success. And when we look at these numbers that we talked about, the likelihood, the potential for that profitability, all we have to show people is the core and the assays. And it seems that the potential exists to do it this way. So I mean, yeah, with all the caveats involved, I think that opportunity is there. And I think that blue sky with the depth of porphyry underneath then makes it really an interesting proposition. It's a once in a lifetime geologist dream, actually.
Mm-hmm. Is this what you've been working on this for a long time? I assume that this project is one of your biggest projects you've worked on over your career.
Personally, yeah. I mean, we've been involved with Majuba for 50. I mean, full disclosure, we didn't talk about it early on. I'm the underlier on it. We acquired this project. We picked it up for a junior that I was involved with in the early 2000s, and they owed us money and said, "Hey, listen, we'd acquired some of the private ground. We have about 25% of the property is private ground, and we had acquired the private ground along the way." And the junior said, a Vancouver guy said. 2007 happened. The bottom fell out of the market. The bottom fell out of the financial market. And they said, Buster, we'll give you the ground. At the time, it was like, great, thanks very much. It was a collector's paradise. There were a lot of mineral collectors for copper minerals, but we ended up owning it. And so since then, that's always been our involvement. That's why when we say we're involved for 15 years, it's because we've been the underliers, but more importantly, because we have a consulting business and we are able to gather that data. When other juniors worked on it and they had their geologist on it, we still were the repository of the data, and we continued to stack that up. As they moved on and the next junior came in, when it finally came back to Giant, we said, okay, we're going to be involved with this. So over the 15 years, it is the largest single project we've ever had internally. I mean, I was country manager in Mongolia for Heritage Minerals. I have worked on bigger settings. I was a staff geologist for a few years on the Carlin Trend for doing exploration for Newmont. So I've been around bigger projects. I've been around big projects all my life. But to be personally, intimately involved with one like this with a junior, I would say, yeah, it's a safe statement. It's the biggest thing I've ever done as a kind of the small operator, the junior operator.
And I'm sure that when you have a project like this and you decide to take it on and work on it and pay the fees to maintain it every year, you don't know if the price of copper is going to end up, like, you tell yourself it's going to go to $5, but you don't know. And that has happened. So suddenly it's like there's tremendous leverage in this property now because of how the economics have changed in terms of the required grades to actually be profitable.
When we got Majuba back the last round, we looked at the price of copper because our decision was, do we put our efforts into this? We've got a lot of nice properties that we have liked around Nevada. There is no end to work for a consulting business. We've got a great consulting business, but we looked at the copper curves, and I think Friedland, for all of his wonderful videos, all of his dramatic hyperbole, has absolutely nailed it. I think you can see this shortfall coming. We've done there is no replacement for copper. There is no substitute for copper. And if you look historically, copper runs on about a 40 to 60 year cycle where big mines come and go. There's been you can go through the U.S. You can go to Michigan. You can go to deep mines in Michigan. As those faded out, then the porphyries started coming on in Arizona. As those faded out, as those came to production, then Indonesia and around the world came along. And you can look at all of those and they're like on a 50-year cycle, and it's all supply demand driven, not necessarily new technology. It's purely on a people and supply demand. And when we looked at those curves 10 years ago, we were stunned. We were absolutely stunned. And in fact, right now, the price is $1 ahead of where we predicted. So we like the price, but more importantly, we like the fact that you're on a project that can do something that big projects have done every 50 years for the last, well, really for the last 2000, but for the last 200 years demonstrably.
So, Buster, last question for you. If I'm following the story, when should I expect drill results to start to come in?
We actually, the first rig we'll have a core rig on site middle of July. We expect to start seeing assay results probably around the 1st of August. The major infill program starts in mid-August. No, I'm sorry, July. I'm off on 1st of September. We expect to start seeing the first results from the core drilling. A major part of our infill is RC drilling. It's a way for us to keep costs down. We're really just filling it places. So that starts in August. We expect in November to start releasing assays, and then kind of a milestone. The course of work would be we'll start seeing assays. We'll start seeing reportable assays along the way. There's always the decision to keep them in context. We're trying to build a story now that shows keeping those in context so we can release news as it comes out. But all of that data will go back to the QP. So in November, by the 1st of December, we expect to have most of the assays in. That then goes back to our QP to respec, and we rerun the model at that point. And then in February next year, we recalculate our model and look at the indicated and inferred values. So I would say September to start seeing assays out, and then probably in November sometime we would start being able to have a bulk of the assays done, and then in February really for the story to really emerge on the recal. But along the way there should be there'll be those points of information.
All right, well, Buster, thanks for hopping on today. Hopefully you'll keep coming back on as the results come in. I think that this is, we're in the very early innings. I know that there's people that are starting to kick tires on copper projects out there. We're not seeing a ton of capital flow into the copper juniors yet. But if Robert Friedland's right, and we do have these deficits ahead of us, I'm sure the stories like yours are going to catch a lot of attention. And there's probably going to be people that are watching this video 6 months, a year from now, doing their homework. So I appreciate you hopping on here, and let's do this again as we get some results in, and you can give us some color on them and update our audience on how the program's coming along.
That'd be great. Yeah, appreciate it. Thanks for having us.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.